Welcome to the Money Watch Show. It's Tuesday, November 28th. It's Giving Tuesday, and I hope that you're thinking about giving because it's a good day to remind yourself, to nudge yourself to do that. And also a lot of great matching donations out there. Mark has decided that he's going to be a Scrooge because he has too many things that he's got to actually spend money on. Maybe Mark, pick one thing and give a few shekels today. All right, will you?
Yeah, we'll give a little bit, just not what we usually do.
All right. I know you got a lot of stuff, but we are always feeling like charitable in general about like, hey, get out there, give some money. And I understand for a lot of people that's impossible to do, but people generally are very giving, and that's a good thing. This, meanwhile, is the program that takes the mystery out of your financial life. And we try to do that by answering your financial questions. If you have one, go to our website, JillOnMoney.com. Click the Contact Us button. And when that form pops up, write us a note. And then fabulously, we get an email. If you want to join us live, check the box. Mark does everything else. Don't forget to sign up for the free weekly newsletter and subscribe to the Jill on Money Live service, because in just a few days, beginning of December, we will be hosting one of our quarterly live webinars. This one is with Daniel Forbes. He is a guy who I actually trained a million years ago, back when he was a pup. And I too was a pup, as a financial planner. Our webinar will be on December 6th at 7 p.m. Eastern time. And we are going to really focus on the year-end tax and financial planning. We'll do that with Dan. He's a certified financial planner. I'm a certified financial planner. Mark's a certified financial planner. I mean, I'm sure there'll be a whole conversation between Dan and Mark about what a pain in the neck I am to work with. You only can join us for that if you are a member of the Jill on Money Live subscription service. $35 for the year. Mark, have you decided what the price is going up to?
No, I think, like I said before, still just waiting to, firm up that final mortgage rate, and then I'll make a decision.
Okay. And so when Mark decides that, then he'll decide how high your rate will go if you join in the future. So you might as well join right now, because $35 is an incredible, incredible bargain. So I would really make sure I do that. Also, you want to do the year-end planning.
It may go to $135 a month. We'll see.
It's not that bad yet, Mark. Anyway, let's get on with the program. Let's chat with Amy, who's on the line from Cleveland, Ohio. Hello, Amy. How are you?
Good. How are you?
Great. What brings you to us?
My father, as a gift, convinced me to get a whole life insurance for my son, who is 17 now, but this was about maybe 4 years ago or so. And he thought that would be a good investment for him. As the gift, he paid for the first 3 years.
So you have an insurance policy on your son's life, not your life, your son's life, right?
Correct. Whole life.
Whole life. And Dad says it's a gift. Talk about the gift that keeps on giving. It's really the gift that keeps on taking. So he pays for the first 3 years. What is the actual insurance amount?
$50,000.
What's the target premium that the policy sends out? Like, how much did he pay each year for the first 3 years?
It came out to about 650 something like that. So it came out to like $52 a month. So around 600 some odd dollars per year.
Right. Nothing terrible. Nothing that weighed you down. Now, was this intended to be like a college savings, or just really get whole life insurance because it's safe and he'll be happy to have it?
Yeah, kind of a combination of everything, because my understanding is that, you can borrow from it in order to pay for college, and then, he could take over when he's an adult and, do whatever he wants. But yeah, I think the intention was college, but also kind of just an overall universal investment.
Okay, got it. Now, tell us about your 17-year-old. He's in high school now?
Yes, he's a senior, so he will be going on to college next year.
Have you saved money in addition to this policy for his education?
I do have a 529.
How much is in that?
About $40,000.
That's great. Do you think that he is going to be going to public or private school?
It's a public university. I already know that it's about 12,000 a year plus another 12,000 for room and board.
Can he live home? I'm just kidding. You don't probably want, nobody ever wants that, but okay. So it's 25 grand a year. And so you have about 2 years. And then what do you plan on doing for the rest of it? Will he get loans, or do you have the ability to cash flow the difference?
I do have some cash that I have for emergency, kind of an emergency slash whatever I can't finance. I use that, and then I always pay myself back.
How much is in the emergency reserve right now?
75,000.
How old are you, Amy?
I am 49.
Are you married, single?
Yes, married.
And does your spouse, do both of you work full time?
Yes,
How much do you guys earn together?
about 145.
You just have one kid?
Yes, one and only.
One and only. Okay. So how are you and your spouse doing on your $145,000 of income? How are you feeling about your own situation?
Well, I always have money anxiety no matter what.
Why is that? What is the root of that? Did you grow up poor?
Yes.
Aha. Mm-hmm. That'll do it, right?
Yeah, my parents were, we were immigrants, and so we came here with nothing. Yeah, my parents just really worked their butts off to get into middle class. And yeah, so I guess I'm fine. We're financially, we're fine. I can't complain about anything, but it doesn't take away the anxiety that, you can lose everything tomorrow if there's a catastrophe. It's just always on my mind.
I am a catastrophizer from way back, so I can relate to that. My catastrophe is not about money. It's usually about health. So, but I completely understand, like everything is fine, and yet you could be diagnosed with cancer tomorrow. That's how I go. You're like, everything's fine and I could lose my house tomorrow. So let's try to get some of your money anxiety dealt with. You make $145,000 together. You've got the 75 grand in your savings. You guys are both using retirement accounts?
Yeah, I have a pension because I work for the government. So I have a pension, and I also have, I believe it's
deferred comp.
Deferred comp as well. Yes.
Okay. What's in deferred comp right now?
I have about 200.
And your pension, you've been with the government for a long time. So if you looked ahead, you're, I don't know how much longer you're going to work, 15 years or something. What would that pension amount be down the line?
I can retire in 7 years.
You're not going to. We're not going to let you do that, because then that'll create money anxiety for you.
I may retire, but I have no interest in not working. I will definitely get another job if I decide to retire, but I'll have full pension in 7 years if I choose to do that.
And what will that amount be?
I want to say it was like 5,000 a month pre-tax, something like that.
And you get medical.
And medical.
So even if you wanted to do something, start your own gig, do your own thing, you got the medical, you're great. Okay. Now, so you've got that $5,000 a month pension potentially in 7 years. You've got your deferred comp of $200,000. What about spousey? What's the spouse got?
He has an IRA.
And it's a traditional or a Roth?
Traditional.
How much is in there?
Not much, because he actually lost his job a few years back, and he was taking from there. I don't know how much is in there, but it's not something I'm relying on.
Besides the $200,000 in the deferred comp, his whatever it is in his IRA, you've got the $75,000 in emergency reserve. Is there any other assets that investments that we should know about?
I started a Roth IRA a couple of years back. There's not much in it right now. There's only like maybe 12,000, but that's just because we just recently started it.
And no brokerage account, and no little fun money. Yeah, we trade stocks on the weekends or whatever you do.
No.
Nothing like that, right? Okay. How about your house?
We have about 170,000 left in the mortgage.
What's the interest rate on the mortgage?
4%.
And what do you think the house is worth, conservatively?
About 380.
And you like it? You want to stick around?
Oh, yeah.
Okay. So if I look at the amount of money that you spend right now, okay, forgetting about the money you're putting away, right? Because I know you're putting money in your 529, you're putting money in your deferred comp. Maybe you throw some money in the Roth every now and again. But if I looked at your real expenses, do you have a sense for what your expenses are?
So at the end of the month, both myself and my husband combined, we have maybe close to $3,000 left. And that money normally I put away because, stuff will always break down. There's always stuff that we want to remodel. So that money always goes into just a high interest checking account. That's what I use if we go on vacation, if something breaks down, whatever.
Mm-hmm.
Not even touching the 75,000 emergency. This is just like here and now type of money. So that's what happens.
Right. We call it the sinking fund, if you will. But so you're saying of the 145, if I looked at your take home at the end of that, like you take home, let's call it
about 5,000 total.
I was going to say 5,000 or 6,000 a month is what we think your expenses are.
Yes.
And that's while your kid is still home.
Yes.
I know you got the whole life insurance. Thanks, Dad, for nothing, but we'll get to that in a second. What about life insurance for you and your husband?
Yes, we have a term life insurance.
And do you have your estate documents done?
No, but that is something we've talked about, and I know it's something we should be doing.
Can I put that on the top of your list before the whole life insurance?
Yes.
Okay. You have a kid. You got to deal with that, right? It's so easy. Can I cure you of your money anxiety? You ready?
Yes.
I mean, you're going to have a pension of $5,000 a month in 7 years, okay? And this is, I know it's a gross number, but you only have expenses of $5,000 or $6,000 a month. Like, you could basically be a complete financial screw up and still be fine for retirement. Absolutely fine. And part of that has to do with the fact that you chose to work for the government, which provides you an amazing resource in that pension plan. So even if you said, I'm going to just, 7 years, I'm done with the government. That's great. Your kid's going to be done with college, which will be great also by then. Like it's nice that you have some cash flow because right now that $3,000 a month is going to be needed to help supplement the kid's college, right? So we know that you'll take care of that. Like once he's done with college, 4 years from now, you will resume putting more money away. You'll keep doing what you're doing. You'll sock it away. And then 3 years. So he's done in 4 years. And then 3 years after that, you're done. Now, all you need to do is make you like to work. So all you need to do is make a little bit of money and you'll be fine because you've got that pension. The money anxiety was instantly relieved when you chose to have a job, which you stuck it out for, in a government that provides an unbelievable pension plan.
That pension is basically like having $2 million in your deferred comp plan right now.
Right now. And it's guaranteed and you don't have to manage it. And it has an inflation rider and like all of these things that are like, and. Amy, honey, you are really in great shape. You don't have to make a lot of money when you have that guaranteed income, number one. And you actually don't spend a lot. Like you guys are doing a great job. And so I don't see any issue on your long-term ability to fund your own retirement, your near-term ability to fund your kids' college, the part that you haven't saved yet in the 529, and in your short-term ability to just keep plowing money into some of your savings. Like all of these things are great. You're on track. I mean, you do get a demerit for having no estate documents, but that's okay. So can I get to your dad now?
Yes.
This policy stinks. And I don't know whether you feel like you want to have this conversation with your father or not, but nobody should be putting any cash into this policy because it's a waste of money for him. Look, there's been an insurance industry that has sold policies to children for probably 100 years. Okay. And the sales pitch is usually probably exactly what your father got, which is somebody said to him, you know what? Not only is this a great way to save for the kid's education, but you're insuring his insurability, meaning that, of course, this kid doesn't need any insurance right now, but once he has a policy, no one can take it away from him. And if he has some debilitating, horrible illness that precludes him from qualifying for insurance, he would have had it already. But all of this comes with a very big price tag. He started it 4 years ago. So there's something called a surrender charge. Do you know what the surrender charge is if we got out of the policy this year or next year? It's usually quoted in a percentage, like the percent that you'd have to get whacked for.
Yeah, so I looked at it and I would get $2,800 and then they would keep like almost $900.
I'm done with that. Mark, do you want your 2,800?
Bye-bye.
Bye. And how are you going to do that without screwing with your father, though? Is your father the owner or are you the owner?
No, I'm the owner.
Oh, good. So we don't have to tell him about this.
Yeah, I was just feeling guilty because like the more I read and the more I listen, and I do listen to your show as well, the more I heard about it, the more I'm like, I don't know if this is a great thing to keep. And I just, the guilt was just kind of eating at me because it was a present from him.
Well, you take that money, put it into the college fund.
Right. Just pop it right in the 529. Literally take it out, get the check, put it in the college fund, be done. That's it. And thank you so much, Daddy. What a wonderful gift. We appreciate it. And for anyone else listening, if your parents are talking about gifting life insurance or, we just want to go out and buy some EE bonds, maybe have them give us a holler first and we can talk about, well, tell us what you want to happen with this money and how can we help you come up with a better game plan? These insurance policies are so expensive. And I really don't like buying insurance for people who have no need for insurance. I get the pitch. It can be compelling in the moment, but that policy came with a lot of fees. And as you can see, getting, $900, like good luck. They're the insurance company. Not only did they get to keep all this money along the way in fees anyway, they get to get a piece of your action. So I don't like that. So let's put this money where it belongs, right in the 529 account. Okay.
Okay. Yeah, that's what I was thinking. I just needed someone to tell me that it was correct.
Amy from Ohio, thank you so much for getting in touch with us. Your next call will be number 1 to the estate planning attorney and number 2 to the insurance company. Get the money and put it in the 529 plan, okay?
Thank you so much for your help.
Okay, gang, if you would like a little bit of help getting rid of a gift that just keeps giving, like a whole life or permanent life insurance policy, give us a holler. Go to JillOnMoney.com, click the Contact Us button, and complete the form. And if you'd like to join us on the air, check that little box. Don't forget to subscribe to the Jill on Money live service. That is where you have access to quarterly live webinars and lots of cool bonus video content. So much fun. Mark Talercio is the co-host and executive producer, as well as the web king of this program, of this Money Watch show. We are distributed by Paramount Global. We drop our episodes every Tuesday and Thursday. Please leave us a rating and review wherever you listen and put your hands metaphorically on someone's back. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you next time.